Hey, good morning again, Bob, Trade Genius, 1st of July. And I'm going to do something a little bit different, and I'm going to make this kind of a regular video. Don't know how often I'll do this, but one of my business partners from another company that we own together is and was the president of a mortgage bank. He's still in the mortgage industry. His company got bought, and he is always asking me about should we lock or should we wait, and what do you foresee the next week or 30 days look like, and and actually the markets can help with that, and also speculation in real estate. I live in California where real estate is kind of a sport, and so I thought I'd share my thoughts on this, and pulling up the TNX dash dash X is a good proxy for mortgage rates, and at least directionally. And you know, we hit a top here in May, and we've been in a downtrend since. And if people are asking me, should you lock or should you wait, like to refinance or to do whatever you want to do, excuse me, is that I'm seeing a descending triangle here, and if we break 2.79%, we're going to drop down to 2.5% on the 10-year. And we're being supported here. There's everything is drifting down, and so if you're looking to refinance your properties, or to refinance or get a home equity line of credit, I would be in a wait and see mode. And then if you look at real estate from a speculation standpoint, is that ever since that volatility bottom, this caught me a little bit by surprise, because it's not one for one with the interest rates here, but people have been pushing money back into real estate, and this move has been pretty incredible. This is a move from essentially 5.990 to let's see here, overshot the runway. We've had a 31% move here in real estate. And I don't care how good a speculator you are in real estate, unless you're building these homes and you get a good price on the land and you can flip that property, you're not making 30% a year on real estate. And I know a lot of people in this space, and that's like nirvana. And so this is a good way for you to speculate in real estate without buying it. And I sold all my real estate except the things I have to own, and in 2005, and I have no interest in speculating other than in the stock market on real estate. So URE is a good proxy, and it's a nice one for you to trade. You can either be long it, or you can sell calls or puts against it, or you can buy puts and calls against it. But right now, it's saying real estate is still on the move higher, and it looking decent. And look at this, basically probably coming up to this double top here, and we probably have to reevaluate. But obviously, if we go into recession, it may change things. But right now, real estate's on a tear, and I think it probably has another 5% in it before it makes a change in trend direction here. And so this is my my trend view here on this, but this has been embedded on money flow, so it's difficult to short this at this point. So anyway, just musing here. I thought it was interesting. So if you're a real estate person, is that looking good, and the interest rates are coming down. And I'll just do this one real quick for you too. The home builders, I think, are also positioning themselves for a move higher too. Not quite yet, but something to keep an eye on. If interest rates fall, the economy stays relatively benign, then I think you'll see a move higher in this index. But at the moment, right now, it's still consolidating. But URE looks good. and the TNX is falling. Thanks for listening. Have a great day. Bye-bye.